Hey, everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And we're going to hop right on into the charts. So, starting off with the dollar. So, as expected, dollar made that higher low, right? So, if you go back to the previous recaps, that's what I've been calling for is that this blue zone, which is a major demand zone, it's been going on for about 5 to 7 years. 5 to 7 years here. This zone has played a key integral part as either major support or resistance, and as of now, since the conquering of it back here in 2023, is now a major support zone, and I have been looking for a higher low from this low right here. So now we have that forming, and in my opinion, after taking out this intermediate pivot high here, we're likely going to pull back, okay, and make another higher low, which will then lead towards a move back towards the monthly bearish fair value gap. So that can be moved back towards 107 and maybe even higher than this high here, going towards 109 to 110. So the strength in the dollar is coming to pass. We are likely going to get short-term weakness, but we will likely see more upside as we continuously respect this zone and come back to tap into more of the liquidity up here around the 107s, 108s, 109s, and potentially 110 plus. Now, you would think that the markets would come down off of this. I do not think so. I think a lot of this is going to happen due to demand outside of the US, demand for dollars outside the US. So I actually think you're going to still see risk on. You're going to see a lot of equities, a lot of crypto still going up, even as the dollar goes up, because internationally the dollar is going to be in demand. This is my opinion. We'll see if time goes and proves me right or wrong. But overall, it's been going as expected on a technical level where we got the higher low. Now I'm looking kind of for a squeezing structure or at least a continuation. So the higher low here, or we come back a little bit further and make another higher low a little bit deeper and then continue on. And in this scenario, it opened the door not just to continuation, but we may even get another pullback like this and then continuation, really creating kind of like that triangle structure in that scenario. Okay, so we're either going to get just a straight up pullback and then continuation, or we're going to get something a little bit larger, a little bit of a larger squeeze where it could lead towards a bigger move going towards the 110s. So if we do end up getting that symmetrical triangle look, that squeezing structure, there's a good shot we'll actually move higher than this high here. We'll go towards the 110s, 111s, 112s. Now, this will change if in March we get clear indications that the Fed is actually going to start cutting. Now, I don't foresee this. I'm leaning more towards the easing part of their policy coming into play, probably in Q2, maybe as late as Q3. So it'll be very surprising if we do start getting signs that they're going to cut now. And if that's the case, then I would actually expect the dollar to break under 100 and we just dump further, going back down towards probably like 97. So, that will change the analysis quite a bit. But as of right now, the technicals are telling me to look for short-term downside and then mid to long-term upside for the dollar. All right, so let's take a move over towards the U.S. indexes. So we're going to take a look at the Dow, starting off with the Dow. And man, what a time they've had, right? I mean, each one, Dow, S&P, and Nasdaq, have taken their all-time highs. They're trending higher. They're now in price discovery. So in my opinion, whenever you're in these situations, you don't really want to get in the way of the markets too much. You kind of just want to let them do what they're going to do, essentially. Let them go up. Let them tell you when they're ready to come back, right? So what's key is now is if we're going to pull back and we lose this low here at 37,147, if we do something kind of like this will be a major sign that this uptrend is either ending or heavily weakening out, okay? So until this low right here gets taken out, I wouldn't really get too bearish on the Dow specifically. I would pretty much hold a bullish perspective, as you should, because it's bullish. But what's likely going to happen, and off the close of Friday, is potentially slow down early next week. So Monday, Tuesday, Wednesday, we may actually kind of go sideways a bit. If we go up to the weekly chart, let's take a look at the weekly chart. Notice that we closed as a doji, right? So we closed under last week's high, which was 38,771.6. We ended up closing this candle at 38,627.9. Now, why is that relevant? That usually implies when you close under the last candle's high, in this case, the last week's high, you're implying a decrease in momentum in the direction. So in this case, momentum to the upside, and it opens the door to a pullback or consolidation. Now, if we go back down to the weekly, we have signs of that doji and then bearish doji. So we are likely going to see a pullback back all the way probably towards about 37,850. So back towards this high pivot here and this fair value gap here. And then ultimately we may even do a little bounce here and then pull back further and tap into these two order blocks here, specifically this order block right here. And if we're going to have continued upside, that's going to have a lot of momentum behind it, we will protect these lows here. So the protected low here at 37,130.8. So if we're going to have more upside, that's going to have a lot of momentum behind it. Then we're going to see a higher low off of this order block or this fair value gap or the high pivot here, the highs of this consolidation here. Okay, so there's a really good shot that we're going to see that if the trend's going to end or it's going to significantly weaken out or we get a really big consolidation. Because just because you lose a protected low doesn't mean you're going into the next phase, you're going into a downtrend. Usually it means that eventually, but it could often lead towards a much bigger consolidation or even the uptrend continuing slightly but weakening, like a very weak uptrend. So in my opinion, we're likely going to see a higher low start forming as we get closer to that low. I don't foresee us taking out this low just yet. I think we're actually going to get another leg or two up before any protected low gets taken out on the daily. So I am definitely in the bullish camp. I think we're in a bull market, at least with the U.S. indexes. I'll talk about crypto when we get there. But yeah, the Dow looks very powerful. We're going to have to redo this chart because a lot of the stuff has been taken out, and obviously we've taken out the previous all-time high. So wonderful, wonderful chart for the Dow, and man, where will we go? What a question, huh? Next is S&P. S&P is the next one. S&P closed a lot stronger compared to the Dow, so this actually brings into the kind of arena that the Dow could end up getting dragged up if the S&P stays relatively strong. In my experience, though, or I should say in my opinion, there's going to be a lot of debate about this. There always has been. What's the most important index? I found that the Dow does tend to lead the way, even though the S&P is arguably more important because it holds the most important companies in the world. For whatever reason, just from what I've observed, I find the Dow usually leads the way. I think it's the daddy, the father of the market, of almost all markets. And so even though the S&P is stronger here, and if we go up to the weekly, it's also going to have closed not a doji, but a decisive break. I do think that eventually it will follow the Dow. And one of the reasons why I do see the S&P as very likely to follow the Dow, it was relatively weak compared to the Nasdaq and the Dow. It was the last one to break its all-time high. It took the longest to consolidate to break through. So, I think it's just a little bit behind in time. So it will probably catch up to the Dow in weakness, in my opinion. But if we look at this just in a vacuum, without thinking about any divergences or anything like that, it's very strong. Implies continuation to the upside without much room for doubt. Its protected lows is all the way down here, but I would say a really significant low is this actual order block right here. So if we start losing that, so if we do something kind of like this over time, that's going to lean towards a major, I mean, it is a really big pullback regardless, but that will lead towards either a major continuation down or a massive consolidation. The consolidation will likely have a bullish bias, but we'd have to wait and see how it's formed. But overall, the index looks really strong. I was quite shocked to see the Dow break the highs, but then to see everything else break the highs, it really killed the theory of a bear market rally, at least in the U.S. stock market. So, and I was part of that camp for a while too, right? So if you go back, if you go back to a lot of my recaps before the all-time highs were broken, you'll see that I was in the camp of a bear market rally as well, though I was bullish, right? So we've been bullish in the lemon garden with everything, pretty much. We're pretty much long everywhere. So we're doing really well over here. Quick plug: if you're not in the Discord, join the Discord. It's totally free. You'll see the link in the description below. And if you want to join any of the services, I do a swing trade service, a tutoring service. So if you want to learn how to trade for yourself, optimally trade for yourself, I can teach you basic things that are just going to work universally, no matter what your strategy is. And then obviously I also do a day trade room as well, where we get people funded, and we just trade crypto and forex markets. And it's been pretty fun. It's been pretty good too. So if you're interested in that, you check the links down below for both the Discord and the Patreon. You can get more details in both those rooms. All right. So yeah, the S&P looking really good. Again, same story. Don't really want to get in the way of it until it tells you it's done. And right now, the S&P, unlike the Dow, is implying more upside, short-term, mid-term, and long-term. All right, let's go down to the NASDAQ to finish off the U.S. indexes. And NASDAQ, same as the S&P, very powerful. Now, the NASDAQ is always going to be a little bit more overextended, whether it's up or down, just because of its nature. It has the majority of the tech. It is going to be a lot more risk on, a lot more rapid. And to me, this is actually going to show very clearly, because tech has been booming as expected. And NASDAQ is showing no signs of slowing down. This guy looks really, really strong. You have beautiful order blocks here to protect its lows here, and the protected lows all the way down here. But again, if we take out any of these order blocks, specifically this guy right here at about 16,200, it will be very similar to the S&P, imply a major consolidations in the works, and will likely kind of trade around the 16.9 areas for a long time. In my opinion, I don't really foresee that happening right now unless the Dow really weakens out next week. It's probably not going to happen. I actually see us consolidating up towards here for both the S&P and the NASDAQ, because in my opinion, the Dow will protect that low we went over. So as long as that low is protected on the Dow, I don't really see deep pullbacks for either NASDAQ or the S&P. So it's going to be pretty much where we're at. Or, maybe I'll be wrong about the Dow and it'll open up really strong next week. And if that's the case, you will definitely see the NASDAQ and the S&P return that in kind. They will also continue higher. Overall, extremely bullish, very similar to the S&P. Just stay out of its way. Let's take a quick look at the weekly just to give it a once-over how it closed. It's going to be quite strong, decisively closed above last week's high. Everything is telling us to just look for continuation. Yeah, I mean, we're looking at a potential 18,000 going to higher. It's like over the next couple years, we might see a 20,000 NASDAQ. So this is an incredible time, incredible move. So beautiful moves on the NASDAQ, S&P, and the Dow. And even though the Dow might be showing some relative weakness, overall it's all extremely bullish. And then put that on top of the Fed is on the move eventually, within a couple months here at least, to be looking to ease, which is just going to put more pressure to the upside for risk on assets. All right, so let's take a quick look at oil, right? So we're going to look at oil, and then we'll look at gold and silver, and then we'll get into the crypto part of the financial world. So looking at oil, just like with the dollar, it's been trading within a major zone, in this case of demand. This blue zone here, this goes back 5 to 7 years, just like the dollar. This zone is very important. It's provided as supply, demand. It's played a huge role over the last 10 years for oil. And as I kind of said with the dollar, the same thing would happen with oil. We would get the higher low, right? So we come back into this zone here, make the lows, and then we get a higher high. And as we were coming down, just like with the dollar, when it came down from about 109-ish, I had said, look out for the higher low in that demand zone. And same thing here. We would look for signs of a higher low being formed, and that's what we got here with oil, right? We got a beautiful higher low. Now, this doesn't mean it's just going to rocket past this high here. Not calling for that. But I am saying that it's very likely we're going to either have continuation back towards 84, 85, 86, or we're going to do what the dollar's also kind of threatening, which is a slight pullback that will lead towards a larger consolidation that will have more of a squeezing aspect to it. If this happens here, just like with dollar, and it breaks up, it validates to the upside, that would actually imply that a bigger move to the upside is going to occur. And we're looking at a move back towards about 95 and probably stabbing towards the hundreds. You got to remember, oil is going to do extremely well in times of conflict, and unfortunately, that is what's in demand right now. We have conflict literally everywhere. There is not a continent outside of Antarctica that does not have major conflict via war right now, at least happening or on the cusp of happening. So we are we are in a very, very precarious situation, very unfortunate situation. And then also, unfortunately, we also see the demand for transportation increasing in all these countries in the West, and we're likely going to see a big, big boom in oil because we're not getting the supply we need for the demand. So it's brewing here, and unfortunately, I do see oil going up. It's tough. I don't really personally want to see it because most people are already having a hard time. So if oil goes up, the cost of living for literally everything, just about everything, goes up with it. Food prices, gas prices, etc. So we are on the verge of a major continuation. And if we do start to take out the highs here at about 95, mark my words, you will see oil get past 120. Okay, you will see oil get past 120. I've been calling for it for now going on since the end of 2022 that oil will be going to new places by the end of this year or the beginning of next year if the wars do not subside. If they do not subside. And as of right now, I don't see that happening. I do see in spring to summertime, Ukraine is going to get there's going to be a whole other movement coming out of Russia, in my opinion, where he's going to expand to go further and probably try and pretty much go all the way. And then, God forbid, what's happening in the Middle East, that seems to also be expanding. And I think the Syrian conflict there is going to get tied in more and more to what's going on with Gaza and Israel, and it's just going to kind of the wheels are going to fall off the wagon over there, it seems like. So oil is going to probably do extremely well. So just keep in mind that the fundamentals are starting to really, really match up with the technicals. We're in a major demand zone. It's been accumulating for a long time, and we've made higher highs and higher lows from the breaking of this downtrend. So we have a major character change happening while the fundamentals are really, really starting to match up with a bullish oil. So we'll keep our eye on it. And then also another hint is to keep our eye on the banks. If the banks start doing really well, banks, dollar, oil tend to be correlated really, really well. And what are we seeing with JPM? It's going up, right? We're seeing a lot of banks are starting to show signs of major uptrend continuation, Bank of America and JPM to be specific. All right, now let's go over to gold and silver. So we'll start off with gold and see how that's been doing. And gold has been relatively bullish for a long time. Had a pretty nice breakdown, or I should say blow off top almost here on this wick here. So let's see as this stuff starts to load up. It's been pretty interesting to watch. Gold, but as I kind of mentioned in the last recap, that we would trade in between this candle here, right? We wouldn't really leave the zone of this blow off top from the wick to the low here, especially if we were bullish. And what are we getting? We're getting pretty much that. We did have a slight breakdown here, but then we came back up, and now we've been squeezing here. And if you look closely, I mean, this is a fairly bullish consolidation. Right, this consolidation is fairly bullish in the context that you are getting higher lows and lower highs, but the lower highs are happening in a way that's forming a flaggish structure, right, after a big rise. So there's a really good chance that over time we will see upside continuation. But I do think gold's actually going to rest for a lot longer. I don't think it's going to be going up within this month, let's say. Sometime later in March, I can foresee gold actually getting another leg up. But I actually think gold's going to kind of rest where it's been for a long time. This blow off top here is significant. It's very strong. Now, kind of similar with gold with oil. Gold will respond to strife with positivity, right? So if the world starts to get a little bit more a little bit more violent, or give or take, it's pretty violent right now. But if it gets a little bit worse, the fear will start to resonate even more, and eventually that will start to reflect in gold price. And the technicals again match it. It's in a bullish situation because the context is bullish with gold, and gold is considered a safe haven. You will see more money flow into it in that context. And if Bitcoin also plays a role here, you could say Bitcoin's eating the market share of gold. That's true, but many people will say, why not have both? And a lot of people do. So as people buy into Bitcoin, they might put more money in Bitcoin over time. They will still put some money in gold as well. You're likely going to see the demand continue. That's what we're watching right now. Gold's not breaking down from this blow off top. It's holding this general zone. It's got demand here. People are okay buying it here, and that's going to continue. And eventually, it's going to force price up because there is going to be continued demand, not just for a safe haven aspect, but we also have to keep in mind that technology-wise, as tech goes forward, gold and silver, specifically silver, but gold as well, will continuously grow in industrial use cases. This will be needed over time, more and more and more. At least for this, for the foreseeable future. We'll see if anything changes over time. But if we look at this via the chart, it's squeezing, creating a flaggish structure after a big rise, and we're likely going to see upside from that. The probabilities are on upside, and if we do get upside, that is likely going to overtake this candle. Okay, these blow off tops do not provide as major resistance at the top of the wick. It's usually the body. Okay, it's usually the body that plays the major resistance, and that's what you've kind of been observing here, right? The body has played as the zone of buying and selling. But if we start breaking above this high here and start trading towards the high side of this wick, it's very, very unlikely this will hold as a place of failure. You will likely see major bullish continuation from that. And if the squeeze gets tight enough, it can happen really, really fast. And we'll probably see a 2200 gold if that occurs. Okay. Next is silver. Silver is going to be similar to gold, but unlike gold, its chart is not as clean. Okay, it's not. I shouldn't say as clean. It's not. It has not been as decisive in the upside moves. It's been a lot more rangy overall, as you can see with the price action. It's been kind of all over the place. But as I always say in pretty much every recap, it will ultimately follow gold. It will get pulled around by gold. That's just how it is. But it is stunted because unlike gold, its industrial use case is already a lot more mature. It's used in just about everything, or almost everything. So the price for silver needs to stay low for most businesses to really have products they can actually sell at a respectable price. So, there's a lot of interest to keep the price low. So I'm sure, let's put it this way: if we knew the true supply of silver, I'm sure the price of silver would be a lot higher than it is. But as of now, it is what it is. Looking at the price right now, looking at the technicals, what we're seeing now is pretty interesting. I actually think this has got a lot more time to be trading here. I think you're going to kind of continue to range as we have been between $22 and $24. I actually think we're going to kind of stay around this zone for the next month or so. And then if gold starts to break from its potential bullish consolidation, then we can get the squeeze that may push silver past 26. But it's going to take gold getting up towards the 2150 area for silver to go after these equal highs again, and probably go after 26.6. But as of right now, just watch silver to continue to kind of trade within this major range, just kind of box here. Okay, nothing's going to really change with silver for the time being. And if gold does get to 2200, let's say, I think that's when silver will actually be taking out its all-time high for the first time. I actually don't think silver's getting up towards the 30s until gold's getting up towards 22, maybe even 23. That's how slow silver's moving, but it will go up when gold goes up, and it will definitely go down when gold goes down. That has not changed. All right, next is Bitcoin. So let's take a look at Bitcoin. Let's take a look at Bitcoin. I also look at Filecoin because that's the free trade I'm doing on the Discord. So again, if you're not in the Discord, if you're watching a recording of this, hop into the Discord. You'll find the link down below. It's totally free to be in the Discord. And I try to do a free trade for crypto and stocks. I haven't done a stock one in a while because there just hasn't been that much opportunity. But for crypto right now, Filecoin is the is the coin that I have that I've posted for everyone. And let's talk about Bitcoin. So if you've been following my Bitcoin trades, then you know that Bitcoin is in a really, really interesting situation. We're right on the verge of potentially breaking towards 50,000, which is pretty nuts. And also, if you've been following me, you know that essentially I have been long Bitcoin. However, I actually recently closed out my long on Bitcoin. Now I'm long pretty much everything else. All these altcoins were long. But the reason why I closed out Bitcoin long is because it broke a key level. It broke a key level that I had been watching. And I had said that if it broke that, I will just take the money off the long. And it was, in my opinion, it was a very good decision. I've been in that Bitcoin long for a long time, and it was worth taking the profits. You got to follow your plan. So I always stress that, follow your plan. Even if you're going to leave money on the table, it's the correct thing to do. Now, the low I was looking at was actually this low wick right here. So you might not be able to see about 40,210. So if one Bitcoin kind of popped down here, I decided to take the rest of my profits off. We had gotten in around like 28,000, 27,000 or something. So it was a good place to take profit. And now we're seeing a big pull up, and we're actually challenging this bearish monthly fair value gap again. That's kind of where we're trading at, which happens to be near the highs here at about, let's see, 49,054. So this is really, really impressive. Now, are we going to break this? We actually may. It's come up enough to pull back here. But if we go to the weekly candle here, so let's take a look at this weekly candle. You'll see that there's actually plenty of room for it to just continue higher. Okay, we've been consolidating for a couple weeks here, and this weekly candle is not overextended. And the reason why it's not overextended is because it hasn't even broken out of this consolidation. Until we start breaking this weekly high here at 49,054, give or take, we're still in this consolidation. So once we get a weekly breakout, that's when we'll have to look for something like this, where you get consecutive weeks in the same direction without rest. Right now, we're potentially just breaking out of that rest. Now, the rest wasn't that large, but it was significant. Okay, it was significant enough. If we go back down to the weekly, you could argue, hey, this is weakening out. We are seeing candles close under yesterday's low. So yesterday's candle closed under that yesterday candle low, and we'll see how this candle closes. But if the weekly closes strong like it is, we may just see continuation beyond and getting into the 50,000s. Now, are we going to take the all-time high? I won't go that far, but I will say the thesis of a bear market rally is weakening out dramatically, especially after the Dow, S&P, and NASDAQ have taken their all-time highs. Now, the argument I've seen is that Bitcoin is in the future. It's moving first, and it took out its all-time high way before the Dow and the S&P and NASDAQ did, and they're just catching up. But now Bitcoin's going into its downturn, and the Dow and the US indexes are a couple months behind, and they will eventually go in their downturn. My argument against that now is, well, the Fed is saying no. The Fed is very clear that they're going into easing mode. And if you think the market's dumped during easing mode, I would say go back and look at the charts, and you'll find that's not the case. It's usually the beginnings of a major rally, a bull market happening. And in my opinion, I am now in the camp that Bitcoin is very unlikely in a bear market rally. It's still possible. Okay, if you go back to my past recaps, I had said For a long time, I thought we were in a bear market rally and everything, U.S. indexes, crypto included. But my thesis was wrong. Thank God I don't trade my ideas. I just trade the chart. Because if I did trade my ideas, I'd be short everything. So, in my opinion, we're likely going to see continuation on the weekly. However, we may end up seeing a pullback before that continuation early next week or mid next week back towards 44 to 43. And if we get that higher low forming, or it may even come deeper towards this order block down here to 42. So if we get that higher low, then we may end up getting the continuation off of that. So we can just get straight up continuation, or we're going to get a pullback to then make the higher low. In my opinion, I think being bearish right now is not really the best place to be. There's not much money in being bearish right now. You have a lot more chance of money to the upside. Now, if we take out this low here now, 38,538, I would say, okay, that does imply that we are seeing a major pullback in the works. So if you get something like this instead, you'll see a pullback. I would then look for shorting opportunities all throughout pretty much this zone right here. And that's when we would want to see essentially the lower high forming, whether it's there or maybe it's right here, and we'll come back towards this general zone here, this unmitigated imbalance area. So that's about 32,000, 33,000, give or take. And even if that happens, it doesn't mean we're going to 15,000 or 20,000 even, but it does imply a significant pullback, and the weekly would likely have to make a higher low itself in that scenario. And then if that does happen, you'll likely see the continuation still higher. It just would take the majority of Q2 and maybe even parts of Q3 for that to happen. But as of right now, this is not the likely path. The likely path is that we come back, make a slight higher low. We're talking move maybe back to 44, 43, and then continuation going into the 50s and potentially beyond. So I have a much more bullish track. The probabilities that I'm seeing make me lean way more bullish than I ever thought I would be, at least by this time. And if we sometime in March start hearing word that the Fed is truly thinking about cutting, and I have them slated to cut sometime Q2, Q3 the latest, but if they imply they're going to do it sooner, you'll see Bitcoin explode. You will see Bitcoin explode, and it will probably take the all-time highs before the end of summer in that scenario. Now, I'm not saying that's what's going to happen, but I am saying be very, very careful if you're short or you're bearish. You are playing with fire because the weekly looks incredibly strong. And today, so far, is held very well. We have about 7 hours. So it can weaken out today. But if we close above 48 today, that is implying a lot of strength. Now, I'll take a quick look at Filecoin before I end the the recap. Just want to talk about Filecoin and also get into, like, there's still plenty of opportunity in crypto. We've had some huge movers like AVAX, ICP. I mean, we've been in those for quite some time, and they've done really well. We've been in a lot of big movers so far, Algo included. But you have stuff like Filecoin here and plenty of other things, Shiba Inu, Flow. There's a lot of coins that haven't moved, but looking at Filecoin specifically, we're mostly break even, I'd say, slightly up. Really respecting this order block, but notice that we've popped up really nice off of this downtrend. So making higher highs now and making a higher low here. This is our first major higher low here, though this higher low hasn't actually made a new higher high, so it's not protected. But it's the first major potential higher low from this low down here at about $3, give or take. But notice that we are in a large structure here. So we haven't even broken out of this structure that Filecoin's been forming for a long time. It's been since 2022 all the way until now, right? So this is a very significant structure. If we go to the weekly here, so you get a bit of a better view to understand the scale of this. This right here, we're trading at a major zone of consolidation here, back from the 2020s, 2019s, and we're creating this squeezing structure. And if Bitcoin is going to continue to break bullish, which it has been, that gives the context of a bullish consolidation here for Filecoin. You also have what looks like to be some potential cup and handle here, or an Adam and Eve bottom. So you have right here the Adam here, and then you're getting Eve here. Okay, and Eve can take a long time to form. Okay, Adam is like a pointed, he's a phallic, he's a man, right? It's pointed, and then Eve is a cupping formation, right? So this here is implying major bottoming potential, and if that's the case, you will be looking at a move back towards 16 to $20 at the very least. And if we do get the continuation on Bitcoin, let's just say Bitcoin actually does go back up beyond the 50s, going to challenge its all-time highs, you will likely see coins like Filecoin at least coming back towards the $25, $30, maybe even all the way up to 50. Okay, ICP is another huge one that has moved a lot, but go scroll back on how ICP looked. ICP used to be what, like a couple $1,000 or something. So like a lot of these coins are down like 99.9% or whatever. So there's still a ton of upside, and you have coins like this that haven't even broken out yet. So overall, Filecoin's doing good. If if you got in with us, around where I got in, you're slightly up, but we just have to continue to be patient. You have to wait for the big moves. And if we are in a bull run, these are the positions that pay out huge. You want to be very patient with them. This would be my third official bull run, so I've been through this rodeo a couple times. This is the time to be very patient, to be very observant, and also to look to try and accumulate things you like, especially because it's somewhat boring. It's not super exciting, so want to make sure that you are on top of things during these times, because when it starts going up, you don't really want to be chasing at that moment. You want to be one of the people who've been in it, and these are the times to be in it, when you're still in the structure and you're still kind of moving slow. But right now we're looking great. I will still say Filecoin is very unlikely to break out, breaking through these highs yet. I think we're actually going to consolidate here all throughout February, and then maybe something in March. We'll see if something ends up breaking from there. Might have to wait for the Fed to kind of give the push for all this stuff. All right, that is it for the recap. Thanks for y'all who came in and were able to sit in live. If not, don't worry, it's recorded. So if you catch the recording, thanks for watching it. If you have any questions, make sure to ask me on the Discord. It's the easiest way to get in contact with me as well. So if you're not in the Discord, make sure to join via the link. Also, leave a comment if you want, whether you agree or disagree, because I do like to read it, especially disagreements, because I like hearing other people's ideas. I am not married to ideas ever. I promise you that. I am always open to other people's ideas. I may not agree with them, but you can convince me. I have been convinced. I'm open to that all the time. It's very important not to get married to your ideas, and it's very important not to trade your ideas. Do not trade your ideas. Trade the chart, okay? Because your ideas are going to be wrong, same as mine, okay? They're always going to end up being wrong more often than not, so trade the chart. So if you're bearish but the chart's bullish, be bullish in your trades. Be bearish in your head and your heart, but be bullish in your trades. The chart will always be right more than you will be. Okay? All right, everyone. Thanks again, and remember, be patient, be vigilant, and be nimble. I love you guys. Take care.